I have introduced a bipartisan bill to reform the housing industry with the chairman of the banking committee, Tim Johnson, and I'm the ranking member on the committee. And there have been some attack ads running in Idaho. I don't know if they're running in Idaho Falls.
Oh,
but,
yes.
Okay, then I want to talk about that because those ads are false, and it's a very good bill that reduces the government's role in the housing market rather than increasing it. And I'll be glad to get into it in detail with you if you'd like, but those ads have been checked out by some of the fact-checked organizations, and the attacks are just completely unfounded.
Actually, yes, that is one of them I wanted to ask you on.
All right.
It's one that I don't understand. It's 60-plus organizations like that is putting it out. And I've wanted to get into more detail, and I haven't understood it a lot, so it's one that
I would really like a good analysis. There is a place called factcheck.org that has just done an analysis of that ad. And so it's way deeper and more than I can say right now, so I just put that out there, factcheck.org. But the point is, I think most people know we've just gone through a huge housing crisis that just about collapsed our economy, and that a huge part of that was Fannie Mae and Freddie Mac that ultimately went belly up and had to be bailed out to the tune of $180+ billion by the taxpayer and are now in conservatorship. And so now, between that and the FHA, we've got like 95% of all mortgages in America are basically managed by the government.
Yes.
And what our bill does is it stops that, and it moves the government out of the business and puts the taxpayer out of the position of being in a first loss on the housing market and winds down Fannie and Freddie. And basically, again, it's really complicated, but basically what we do is we put strong underwriting standards in place. We require about 20% either down payment or mortgage insurance plus down payment. We require the private sector to come in and guarantee these and do all the marketing and purchasing of the mortgages and the mortgage-backed securities and do all of that in the private sector. And then we do have a government backstop that has some people unhappy. But experts have said that the private sector money we have in front of it, plus the mortgage insurance fund and all of the protection that's in place with our underwriting standards, makes it extremely remote that any kind of problem would ever come up that would put the taxpayer back in the position of having to back up the market. And we basically put the private sector back into the marketplace.
Well, let me ask you on this. I mean, the problem we had started clear back in 1993.
Yep.
And government getting more involved. For me, I'd like to see government completely get out. Let's leave it to the free market. Let's leave it to the banks and to the mortgage companies and so on, and let that take care of it and get the government out. Is that a direction you'd like to see this go?
Oh, absolutely. In an ideal situation, I agree with you. And frankly, our bill does like 99% that. And some people have said, well, why not go the other 100%? There's two reasons, and that is if we don't have the kind of protection system that we build up in this bill, then we will have another collapse and we will have another bailout. And actually, I think that the government's more involved with that kind of an implicit guarantee than the way we've set it up to put parameters around it and prohibit any kind of a serious look at the taxpayer in this situation. So I actually make the argument that we're taking government further out of the business than if you went back to the way it was before with no protections built in place.
Well, I'd like to go before Fannie Mae and Freddie Mac, but I don't believe. Yeah. For me, I don't like the protections because you can go out and you can reach out further. You can do more and more because someone's back there to back you up. If there's no one there saying, if they can put their own protections in there, but if the government's saying we're going to bail you out, there's not the concern.
Well, no, I do agree with you, except the only point that I make is that the government, as we have seen in the auto industry, as we have seen in the home ownership industry and in so many other industries, in the banking industry, the government is going to step in, unfortunately. I voted against every one of those, but the government is going to step in if we don't have a system to structure it. And my point is our bill forces so much of the private sector back in front of the government that you could go through a crisis that is 2.5 or 3 times as bad as the one we just went through, and there would still not be any government involvement in that market. And so we really have propped it up. And you can argue it back and forth about about whether that's better or worse than having no guarantee and protection put in place at all. I think history has told us that if we don't structure how the government's going to be protected in the crisis, then the taxpayer is going to get thrown in there. And so I actually think this is better than even before Fannie Mae and Freddie Mac.